So, Mike, just give us an overview of who you are, what you do.
Yeah, hi, my name's Mike Arnall. Obviously work for Sentinel Legal as the operations director. My sort of background really is in regulated and non-regulated complaints and compliance for major insurance company in the UK. That was Aviva, and I worked there for about 25 years. And then I moved out into contractual work, working for a lot of big companies, Legal & General, Lloyds Bank, Financial Ombudsman Service, Santander, Halifax, a lot of different companies, mainly doing regulated complaints and operational management type roles.
Okay, so, and then obviously the reason we wanted to do this podcast was because obviously your experience in handling redress, doing things at Lloyds with obviously the pension redress, stuff with the financial ombudsman that we'll get on with. But more importantly, obviously, quite fitting, we definitely didn't stage it as this, but it was quite interesting that the FCA came out yesterday and said that, they kind of shot from the hip, it seems like, doesn't it?
It does a bit, yeah. It seems to be, I don't know, it'd be difficult to say that it was a knee-jerk reaction, but it does have that written onto it a little bit. And, you know, I don't know what the exact practicalities behind what they said will actually mean. I don't think anybody does. But if you look at it and you take all the figures and you look at everything, you have to ask questions about who is actually going to support that type of move, because it's going to do is really lump the redress payments into a very short time frame. So, like, companies are going to have to somehow find the revenue to pay out these claims in a shorter time frame, and they could end up paying out claims that they wouldn't normally have paid out. You know, if maybe someone was an experienced borrower and they may even have worked within the industry. Well, how are they going to sort all those out? So I think there's a lot of big unknowns in that statement, but more importantly, it's what impact is that going to have on absolutely everything, just by having it in such a short time frame. And to give you an example, like in the PPI world, the redress was about 53 billion, and that was spread mainly over 9 years. So you're talking about rough figures of £6 billion a year spread across those 9 years paying out. This is going to be huge, and I think everybody's now realising this is going to be huge. If you sort of concertina that redress into such a short time frame, you're going to put yourself in a position where some of the larger companies like Black Horse and Santander and BMW and Mercedes, they are really, in my opinion, going to struggle to sort of find the funds to pay this out, because you're not, it's going to need to be paid pretty promptly, and a standard is normally 8 weeks to deal with a complaint. If they're going to be, inundated with all these complaints that they've already got, plus they're going to have to look at everything else that's on their books, these payments are going to be fairly, fairly quick in 2026. What sort of money are they going to have to put aside to make that payment? I mean, they are staggering figures if you think about it. And where's that money going to come from? And what knock-on effect is that going to have? I mean, we were sort of faced with the potential of the Treasury getting involved in the Supreme Court ruling that's coming up next month. So they obviously are worried about the amount of redress that's going to be paid. They've openly said that they're worried about that. To bring in a scheme like this, where you're actually going to, one, pay out more money than perhaps you would have done if you were relying on people to complain, and secondly, that money is paid out in a short time frame, doesn't seem to fit with what the Treasury were trying to do in intervening in the court case. So you seem to have the sort of same side on two sides of the fence, really, and that doesn't really make that much sense at this particular moment in time. I mean, obviously we need to wait and see exactly what happens in the Supreme Court ruling and what the FCA come out with further down the track. There's lots of things here that could snowball from this announcement.
Yeah. I think just to weigh in there, because I mean that was a lot of information, but just to unpack bits of it, and especially for people who are listening who don't quite understand what we're talking about. Yesterday, the 11th of March, the FCA put out a very ambiguous statement, in my opinion, a lot of word salad, but they basically said that they were going to start consulting on a industry-wide redress scheme, whatever that word means, industry-wide. And a lot of people have been drawn to the fact that they're saying that they want to make it simpler for the consumer to make a complaint via this redress scheme, and they're trying to reduce the reliance on claims management companies. But there's a couple of interesting things I wanted to get your opinion on where they said it. And if you go back, and I've read this about 60 times now, but it says, there's one particular sentence. It says, since we launched our review, a ruling by the Court of Appeal, which, just for absolute clarity, was a unanimous decision by the Court of Appeal that was sided with the consumers, that widespread mis-selling has happened, and that they have been found acting in their own self-interest, and they didn't disclose commissions the way they should have, and that was deemed unlawful, and the entire industry over a period of 5 days shut down and had to rewrite all of their terms and conditions to now get informed consent, so that the customer now has to have a written piece of paper that says exactly how much commission is being paid to the broker from the lender, how that commission is disclosed, how that commission is calculated, and whether they agree with it. And I think that's, that should have been the way that business should have been done from the start. And it took them a very short period of time to do it. But what they've actually said is, a ruling by the Court of Appeal has raised the possibility of widespread liability amongst motor finance firms, whether commissions were not properly disclosed to customers. Now, this is the FCA, Financial Conduct Authority, who's the regulator of all of these banks, all of these car finance lenders, all of these brokers, all of these dealerships. Anyone who touches finance to it and sells it to a consumer is regulated by the FCA. So what do they mean? And this is just unpacking what I originally said about the word salad and full of ambiguous statements and misleading. It feels like it was a knee-jerk, misleading announcement and nothing more of it. But they've said a number of things within here, saying the possibility of widespread liability amongst motor finance firms, whether commissions were not properly disclosed. Well, there's a Court of Appeal judgment that says they weren't disclosed properly, and that widespread liability does exist. So just give me your opinion on that. From your compliance background, the stuff that you did with in Lloyds with the pensions reviews and stuff that you've done at FOS. Just looking at this announcement on the surface, because I know it's a burning topic amongst a lot of people at the moment, what has the FCA achieved from this statement? Because they weren't supposed to put a statement out until the 25th of May.
No, that's fine. And I mean, to be honest, I'm not sure that anyone really knows exactly what they mean by those statements. But you've raised a couple of points there that are very valid. They're saying, if that commission was wrongly charged, not disclosed, this is the same organisation that probably 20 years or more ago decided that if you were an appointed representative of an insurance company or you were an independent financial advisor, you had to disclose the commission that you charged for every contract that you sold. And that was the FCA who brought that in. And those contracts may have been pensions, they may have been in investments, but they might equally have been small term insurance policies. Not only did you have to disclose the amount of money that you were going to earn, you had to actually show what detrimental impact that would have on your savings or on your pension and everything like that. And these IFAs and appointed representatives, they'd have to show in a quotation exactly the impact of that commission on how much money you would lose through them taking a commission for selling that plan. That was 20 years ago. We're talking about maybe you bought a car for £45,000 or you bought a £10 term assurance policy. If it was valid for the £10 term assurance policy, why at that particular time did they not think, well, that should be valid on probably the second largest financial transaction you're going to make other than buying your house. And that's what I don't quite understand, where they're saying, oh, maybe this commission was hidden. They had an opportunity 20 years ago to bring this to people's attention. They did it very well, to be honest, and probably it made it a lot clearer in the financial industry with regards to sort of pensions and mortgages and all them types of contracts. And it still happens today. Why they stopped there, I don't know. I mean, they must have thought people aren't telling people about commission. We need to do something so the public understand. They knew that this was going on in the motor industry. I cannot believe they didn't do it. And even give them the benefit of the doubt, they weren't aware of it at that particular time. Why did they outlaw it in 2021? They must have known there was an issue. Why didn't they then? They're very keen now to do a sort of proactive review of these commissions. Why didn't they do it at that particular point in time? Why have they had to wait for companies such as Sentinel Legal and other companies to bring it to the forefront and the attention of everybody that, look, this is a major problem? And had that not have happened, would the FCA actually have, off their own back, said we need to have a review of these? You can make your own mind up on that. I know where I lay on that. I don't think they would have done. And so, they've been forced into a corner by a very small sort of percentage of the market who are looking after the consumer's interests. And, then they've now started to say, well, you don't need these people. Well, without these people, we wouldn't be anywhere near the position we are now. Who would have took on the sort of appeal courts and who would have taken that further to the Supreme Court? It could only fall on outside companies and law firms and people who have the consumer interest at heart. And I think people are forgetting that point.
Yeah, no, I'm glad you sort of brought that up, because I put a post on LinkedIn yesterday commenting on it, saying that, there's a lot of mudslinging at CMCs, and the other side, the lenders, the brokers, they all seem to, want to muddy the waters and put you all in the same bracket. Yeah. But the reality is that without Kevin Durkin at HD Law and consumer rights, this wouldn't be at the Supreme Court now. No. You as a lay person cannot make a complaint to your lender, and if you're not happy with that, then escalate it to the county courts and then appeal that, take it to the Court of Appeal and take it to the Supreme Court. The answer is you cannot do that without legal representation. No. And one of the things that I put in the post is that the FCA has not, to my knowledge, and definitely to your knowledge, approached us or any of the other firms that are doing any form of litigation, as far as I'm aware, on any form of meaningful consultation. They've not had a look at our disclosure, that's for sure. And the main point of the post was to say that if an industry-wide redress scheme was to actually happen, then who is going to be the gatekeeper to say what is fair? Because as we've seen, and you'll be able to shine more light on this because you see the correspondence just as much as I do from the banks, they lie. Yeah. They cannot be trusted. I mean, we've got multiple examples, and the two examples I used yesterday in the post on LinkedIn was that Santander wrote to us as an SRA-regulated law firm that was litigating a case. It wasn't a complaint. It was fully issue fee paid. We were in disclosure, and they said there was £156 paid as a commission on a particular client's deal. 15 months later, it was £2,500. Another example, we had 456 quid, I think it was. That was £2,900 after about 9 months of pushing. So who, because it's definitely not going to be the regulator, and it's certainly not going to be the banks that are self-policing, who is going to be the litmus test to say this is a fair deal for the client and you're not undercompensating them? And that's the biggest beef that I've got with the FCA announcement, because they say a redress scheme would be simpler for consumers than bringing a complaint. We would expect fewer consumers to rely on a claims management company. Now, I'm sorry, they do a lot more than process a complaint. hence the Supreme Court, hence the Court of Appeal. They are law firms, but who is going to sit there acting on the client's best interest, the consumer's best interest, who's already been ripped off, to ensure that they get the redress that they deserve and they don't get lowballed, as we've already seen during litigation in God knows how many times. So with everything that I've just said, and obviously what you said at the start of this podcast, how can they do it? Because just going back to your PPI experience, you said, I think I can't remember what exactly you said at the start, but I think you said it was about 50% of people who were eligible for a complaint made a complaint.
Yeah, maximum, yeah.
Maximum. And did they do it themselves, or did they go via a law firm or a CMC? And what was the process during PPI days what was the sense check to say, is this a good deal for the client or isn't it? Because at the minute, I can't see a scenario with an industry-wide redress scheme, if we was to take it from its literal sense of the meaning, thinking you don't have to make a complaint, as they've said in this post, in this statement, you will just be automatically redressed. How can justice be done?
No, that's a very good point. And I think there's lessons to be learned from the PPI, and the PPI that then spilt into the Plevin side. And what you had was, if you made a PPI complaint to some companies and your complaint was rejected for XYZ reason, and maybe mightly rejected, I'm not saying it was or wasn't, after the Plevin case had gone to court, there was obviously then the undisclosed commission, hidden commissions, etc., and those cases to make. Now, these people had already had a rejected claim, and they will suddenly get a letter because it's rejected saying, we've looked again and we believe that your commission was a little bit unfair. We're going to rebate you the difference between what your PPI commission was and 50%. And that was called a tipping point letter. And, these were sent out en masse by large lenders of the complaints that they rejected. Now, what you then got faced with is you would be sat at home, you'd have made a complaint possibly, 2013, 14, 2018, you get a letter through the post that says, dear sir, we've had a look at your complaint again and we're prepared to pay you £400 in full and final settlement for that. You're going to think, yeah, that's a good deal. I wasn't expecting that.
I don't have to do anything. I'll take 400 quid.
It's been rejected. What you haven't been told is that commission was hidden. And the courts have actually said that, okay, you may still have bought the policy, but the commission was hidden. So we'll take some of the commission and say that that's genuine, but the bulk of it, and in some instances all of it, should really be returned to you. And so you then ended up with sort of people accepting and signing full and final settlements for maybe 32% of the commission that was paid when they were really entitled to all of it. And are we going to see the same scenario here? And are we going to be in a position where, like we were on these Plevin claims, that there will be almost like two waves in this review? One is that all the companies will write to everybody and say, we're going to give you back X. And then, as you pointed out quite correctly, we've seen lots of cases where all the commission isn't disclosed. It then goes to a firm like ours. We look at it and say, well, okay, you got that, but really you were entitled to that. And now we will go down a litigation route to get you back the full amount of money you've got. Now, where does the sense lie in that? Because that's beyond me. Surely you're best to do this in one go. Nobody wants another PPI situation that dragged on for years and years and years and years and years. And it only ended because, the FCA quite rightly came out and said, right, there's going to be a cut-off date. And that date was sort of stuck to. But then, because of the way that it was reviewed, that cut-off date only cut off having a look at whether the PPI was missold. The Plevin thing is still going today.
Yeah.
Now, does the motor industry, the FCA, the British public and everyone want another one of those? I don't think they do. I mean, what they want is, here's what's gone wrong. Let's put it right. Let's do it first time. There's no need to take it to the courts. There's no need to take it to the Financial Ombudsman Service. Let's get it sorted out at the first attempt. But how I read it at the minute is that what the FCA are proposing and looking at doing isn't really going to achieve that goal. I mean, I think it's going to push things further and further and further down the road.
Yeah, well, I think you've hit the nail on the head there in terms of what, if we rewind maybe a month or so ago when the FOS came out and announced obviously that they're going to be doing those fees, which obviously puts severe cash flow restraints on people genuinely escalating complaints that have been wrongly or rightly rejected to the Financial Ombudsman. But then you come out with a statement by the FCA that says we're going to remove the reliance of on claims management companies, and they're talking about like almost an industry-wide redress scheme where the lenders will contact you. It genuinely feels like this is like the second or third barrier to limit exposure to the banks. Yeah. And, you know, the biggest one with my cynical hat on is that whose side are they on? Because from my understanding was that the FCA was always there to protect the consumer. The same with the Financial Ombudsman. But it seems like multiple barriers are being laid now to make it nigh on impossible for one, complainants, typical lay people, to make a complaint and know where they genuinely stand, you know, from what is a fair deal in terms of compensation, but also the ability to then utilize experts in the industry. So you make a complaint as your own person, you think that the complaint's what they've offered you is not enough, or they might have not held your complaint. You as a lay person who has no time to be doing this would then look to instruct an expert, whether that's a claims management company, whether that's a law firm such as Sentinel Legal. But then that law firm, that claims management company, then has to appraise the viability of your argument, you know, not just from a cash flow perspective, but from a likelihood of success and how long that's going to be done, and decide whether they want that fight. You know, they've got to pay 250 quid just to file your to file your complaint if they don't get anywhere with the lender. The lender's going to write to you, as we know, and say, yeah, we're already dealing with this client, or we've already made a full and final settlement offer to this client, or the client's already stupidly accepted it because they were put into a pressured position, or they were made to feel like it was the only option. You know, all of the tactics that these lenders use to, I mean, I've even seen it where they've said to the client that, limitation, you past that now. Well, we all know limitation doesn't start until you're made aware of the missale. Yeah. So there's all these tactics that have been going on for years, and now the FCA's come out and gone, we're probably going to put another barrier in the way for the clients here now. That ultimately, like you said, PBI was 53 billion. Yeah. Only maximum 50% of eligible people made a claim. Yeah. So what happened to the rest of that money? The bank profit for the banks?
Well, yeah,
it's not a bad business model.
No, it isn't, and that's sort of valid things that you raised there. But so one of the things really is, I think, you know, what the way that the FCA are approaching this is, I think they are, in an extent, trying to almost miss out the FOS stage, because if you know, no one's going to have a complaint rejected, so therefore, strictly speaking, if you've never made a complaint, you have no rights to take that complaint to FOS. Because to take a complaint to FOS, you have to make a complaint. You have to give the company time, which is usually 8 weeks, to deal with the complaint. You then get the FOS referral rights. And back in the day, you had 6 months. I know that they've looked to change that to 18, and they may switch again now with these things. But you have that time frame in which to make that complaint to FOS. If you've never made a complaint, you won't be able to take the case to FOS. So what you're really faced with is, if you're not happy with the commission that you get back, as you've not complained, who do you go to next? Do you go back to the company and say, no, I'm not accepting that offer?
So then you have to make a formal complaint.
And then you make a complaint. Yeah. And so that then sort of delays it, but you've made the complaint, and then that can then go to FOS. But you can't go to FOS until you've gone back yourself. Now, you know, a lot of people out there don't have the confidence and the courage to do that because they don't like taking on the banks. I mean, you know, they were brought up maybe sort of in a world where you almost respect the bank. I think that's gone now, but that certainly was there sort of back in my parents' day. And, you know, you're in a position where you haven't got the ability or the confidence to take on a Black Horse or a Mercedes or a Santander or a BMW or whoever. And so, you know, how is that benefiting the consumer? I don't see that. And without the aid and the help of intermediaries, once call that, you know, law firms, CMCs and everything like that, you don't have anyone fighting your corner. And, you know, I've worked on the other side of the fence. You know, we said at the start, I've done work with Lloyds Banking Group, and I have seen the standard of work done historically by some CMC firms. And it's shocking. I will sit here and openly admit it's wrong. But that was before these firms were regulated. Who regulates these firms now?
Yeah, the FCA.
It's the FCA. Yeah. So if they're saying that these firms aren't doing it right and they're not got the consumer's interests at heart, why are they regulating these firms in the first place? I mean, they're in charge of these firms. They make the rules for these firms. If they're not happy with them rules, then take it out on those particular firms. Don't take it out on the whole sector, because the whole sector has put this in the public eye and has brought everything forward and allowed what is literally going to be millions and millions of people to obtain and get back money that they have unfairly paid. Now, you know, you can have a go at CMCs, you know, feel free. You can have a go at law firms, feel free. But don't forget what they've done and who's actually responsible for putting people on the edge of getting back what they're owed. You know, nobody wants to see people get, you know, loads of compensation for, say, you know, that's not what it's all about. What it is about is, have you been wronged? How much have you been wronged? Let's put you in the position you would have been in had you not have been wronged in the first place. And that's the same with any other review. You know, the pension review, the endowment review, all those reviews were put in to put people back in the position they would have been in had they not have been given the wrong advice in the first place. It wasn't to make them multimillionaires and rich people or allow them to go on holiday. And, you know, it's just given them back what they're owed. And certain people seem to miss that point, I think.
Yeah, you've hit the nail on the head. I mean, you couldn't say it better myself. No one's, for some reason, I mean, with the comments that we see on the videos and the comments that we see on LinkedIn, for some reason, the other side seems to think that you're going to be writing lottery ticket checks. And it's not. It's how much commission did you take from this person? Yeah. How much commission did this person pay? You know, we've seen the ones like on the Range Rover, £16,000. Yeah. Okay, £16,000, give it back. Yeah. Plus an element of statutory interest, which is normal, absolutely normal in PPI, it's normal in Plevin, it's normal on all financial ombudsman redress schemes. So, you know, no one's asking for anything above what they're actually entitled to. And I think they forget this. But like you said, you know, the FCA regulates the claims management companies. It's not using them as any form of sounding board for any redress scheme, as far as I'm aware. But they were more than happy to let law firms such as Sentinel Legal and claims management firms that are obviously regulated by them to do the work, to do the investigations, to do the litigation, to ultimately force the court to the Court of Appeal, to force it to the Supreme Court. They're intervening in the Supreme Court. You know, they've been allowed to do that. So you're happy for us to do all of the work, all of the investigation, and then right at the 11th hour, you're going to come in and try and water it down, are you? Yeah. You know, Martin Lewis, we both watched the Martin Lewis video yesterday. What a laugh that is. I mean, I don't know what planet he is on, but he's definitely he'd not read the Court of Appeal judgment. He said in his video there's a 10% chance. It's highly unlikely, was his words. And I'll post the video to it. It was on Facebook. But he said it was highly unlikely that the Supreme Court is going to not overturn the Court of Appeal. On what planet?
No. I mean, I don't know, you know, I think the term he used, I might be wrong, was the word on the street, you know. they're not on the streets that I walk up and down. No. I haven't heard those words. And you know, it is, yeah, you know, to an extent, it's good that he's put everything in the public eye, and I don't want to knock about, but, you know, there is a limit to, you've only got to read what the Court of Appeal said. And it wasn't like, oh, this is a really close decision. You know, it didn't go to VAR.
Yeah.
It was, you know, it was clear and obvious what the decision was. And, you know, I think that they were quite happy that the Supreme Court look at this, but really just to rubber stamp it, not to actually say, oh, the Court of Appeal was wrong here, because, I mean, there was nothing in the summing up of the Court of Appeal that would lead you down to believe that to be the case. And, you know, in all honesty, if the FCA think that there was something wrong, they wouldn't have made this announcement now. Surely they would just have waited another 12, 13, 14 weeks or whenever that the actual judgment is given, before they made an announcement of what they were going to do. The fact that they preempt it, in my opinion, means that they've got a clear idea of how that case is going to be heard and going to be read. Because otherwise, why would you know, put that cat amongst the pigeons? I think that there's, you know, got to be strong evidence that they believe that's going to be sort of just rubber stamped, right?
Yeah. I want to circle back to something you said at the start of the conversation. You said when PPI was going on, it was to the tune of around $6 billion a year, and it was spread out over a number of years, as we know. And that, you know, from a cash flow perspective, obviously, I don't know how that works with the banks, but the redress or the what the FCA is proposing is the crux of it, the bedrock of it all, is making it simpler, making it easier. And they love to dine out on the fact that they're saying, we want the industry to thrive. You know, a lot of millions of people rely on the car finance market. Obviously, it makes purchasing a car a lot easier, and you know, you can't disagree with that. But to say that they're going to come out and within 6 weeks of the Supreme Court's decision, and they're announcing a redress scheme, and you know, it's going to have a bookend on it, aren't they just not learning anything from obviously the positives and the negatives that came out of PPI? Aren't they making it severely difficult and almost engineering problems by trying to rush a redress scheme, not properly consultating on both sides of the aisle, but trying to force it out, put a load of pressure on the banks, put it in people's pockets, and that's it. Then said and done. Should they not be looking at what they did with PPI and letting it run over a period of a decade, where it goes, well, how many complaints realistically can be processed and managed each year, and speaking to the banks and saying, well, this is how we protect the industry by spreading the risk out over a number of years to help with cash flow.
Yeah, I mean, that's a really valid point. And, you know, one of the sort of lessons, and if you look at the sort of big players in the PPI market, you know, they didn't do the review once. They didn't even do it twice. You know, they probably ended up reviewing cases 3 times. And, you know, there was different ways of redressing these cases and how these cases were going to be reviewed. And so, you know, there was some complexity in a PPI review, and, you know, it was a bit subjective. And I understand that the FCA are trying to take that out of this review. But as I said sort of earlier on, they've got one chance and one chance only to get this right. And you're quite right. Why would you rush it? I mean, who's putting pressure on them to sort of rush this through and get that redress? Now, you know, the only thing they can really do in such a short time frame is whatever the Supreme Court rule, and we know what the redress decision was in the Court of Appeal. You know, that is what they're going to do as the redress. That's fine, but who determines what is the level of commission? I mean, you know, and I know there was commission, and then there was sort of other commissions such as incentive commissions and
volume bonuses
and everything like that. are they going to fall in? Because they were paid for by the consumer.
Yeah,
I mean, however you look at it, that money didn't come out of the bank. That came out of the consumer.
They're itemised on the statement.
Yeah. And we've seen that, even if they've tried to redact it in
Correct.
certain instances.
As they have done.
As they have done. So, we know all this exists. Who's going to determine your commission is this, And then we know full well that certain companies out there don't even have any records. If they don't have any records, how can they possibly, without somebody complaining, even know this person had a loan with them, let alone how much that loan was, how much did they borrow, how much the commission was. And by not allowing people to send in a complaint and putting their side of the story, i.e., I took a loan out for this registration on this day, those companies aren't going to be able to trace these people if what they've said about not having records is true.
Well, I just want to touch on that, because one of the major biting points that the other side come out with on social media is that law firms, claims management companies submit fake claims, for want of a better word. And the difference here now with car finance, especially with the way that we do it, is that when we submit a complaint, we don't just have the policy number of the agreement. We have the car registration number, the VIN number, the client's address, previous address, if they've been there less than 3 years. We have the start date, we have the end date, we have the amount of credit that they took out. It is completely different landscape now when it comes to submitting a complaint from the lessons that were learned during PPI and Plevin, how to properly package a claim. But we're giving them everything they need. If they can't find it by the policy number, find it by the start date, find it by the address, find it by the VIN number, find it by the vehicle registration. The list goes on. So you almost can't, and obviously people will say you can, you almost can't submit a fake claim and it get very far.
No. I mean, the one sort of, if you like, unique identifier in all this is the actual agreement number. Registration numbers, I mean, we know from the work that we've done, people have a personalised plate, it goes round, or you could have, I could buy a car, sell it 3 years later, and you could buy that car.
Yep.
So, that registration number could be duplicated. So, a registration number, whilst it is very, very helpful, doesn't identify a claim. An agreement number does. There's only one agreement number, and only one person has that agreement number. And, I do think that, sort of the work that I did on PPI, without doubt, companies were just submitting claim after claim after claim after claim to all companies, not knowing full well whether or not there was even an account or a loan with that company, let alone it had PPI. But the sort of checks that we've got in place doesn't happen now. And it can't happen now. We know that they had a car. Yep. We know they had a loan. We know when that started, as you rightly say. We've got an agreement number. We've got a registration number. We've got a date of birth. We've got a name. We've got an address and previous addresses. There's no, can you tell me whether this person had a loan? We know they had a loan.
Yeah, we know they had a loan.
You don't have to tell us that.
And I think claimant law firms and CMCs have learned, the big ones that we're speaking to who are probably going to be the biggest players in the space, we're all sharing data. Everyone's duplicate checking against everyone's database. We're all making sure that no one's dual representation, triple filing a complaint with the same lender.
Yeah.
There's been a lot of checks and measures done, and obviously technology is massively advancing, submitting everything on spreadsheets via PPI in the PPI days to make sure that this is going to be a very, very slick process from our end.
Yeah.
From the consumer side, it's going to be very slick. It's very robust. But what are the FCA doing about the likes of Mercedes-Benz who aren't keeping records for more than 6 years? They say we're going back to 2007. We're going back 15 years.
I mean, it is, in a way, it's quite frightening that a sort of intermediary third-party firm can have more information about a transaction that a bank did in 2008, 9, 10, whenever you want to pick, than that bank has. And, that is why you have to sort of have a little bit of doubt on whether these firms may not even intentionally, but whether they have the ability and the record keeping historically to be able to do a fair review. And I don't know that they do. If I'm totally honest, I couldn't sit here and say, they have all these records. They don't. They probably have less than we do. And that's scary, because who's then going to take up the case if it's an actual sort of proactive review and no complaints are sent in? It's just going to push that down the road until these injured people, if you like, are picked up by companies, nursed back and put in the position that they should have been in. And we shouldn't be pushed in this position. We should be able to take that on at the start.
Yeah, you make a really good point about that, because if we're to go off what the FCA is saying in their statement when they're doing this mass redress, industry-wide redress scheme, if the likes of Mercedes-Benz have started to destroy records only going back anything over 6 years, how are they ever going to contact the client? How are they going to pay the client out? How are they going to get in touch with the client to say, oh yeah, you as a Mercedes-Benz customer and we owe you some compensation?
They're not.
Literally, they're not.
No, I mean, this is the problem that you've got. I don't think that the way that the FCA statement read, I can't see how that can actually work. You could have an 80-20 rule and it'll work in 80% of the cases. I'll take that. But it's not going to work in the 20% of the cases. And you're not going to know where those 20% of the cases are, because no one knows other than the client whether or not that exists. And, I'm sure, I bought my first car sort of probably 45 years ago. I could list you every car I've ever owned.
Yep.
And I know roughly when I had them and everything. I've got that information in my head. And, what you've got sort of there is the customer knows. They know what they bought. They know whether or not they had that financed, and possibly they even know where they bought it from. But the companies don't. And so, already is the consumer not being disadvantaged by the fact that he's not allowed to put a complaint in? He's reliant on the company who don't have any records to tell him that he had a complaint.
And just to clarify, you're relying on you're relying on the company that previously missold you to tell you that you've been missold and to give you money back.
Yeah,
doesn't really make sense, does it?
No.
But so, just going back to your experience, and I want to start talking about the FOS a bit, because you made some good points last week, and why we wanted to do the podcast is that your time at the FOS, just give us a bit of an idea, and obviously only talk about what you can talk about, but in terms of the size of the FOS and the size of the teams and the amount of complaints that they can handle, just give us some broad numbers on that, because obviously we're looking at the FOS being interrogated by the Treasury Select Committee.
Yeah.
And obviously we're looking at I think they said they've got like 66,000 or something car finance complaints already backlogged waiting for the Supreme Court. How long would it take the FOS to do anything meaningful that would be in the client's best interest, given that they already have such a massive backlog? They haven't started charging the fee as of yet. And obviously the only course for escalation, should we say, for the likes of claims management companies, because Sentinel will just issue on them and will litigate them all until there's a fair redress scheme. How could the FOS handle such volume of complaints?
We're going back quite a number of years here, and so things have changed. And
you'd like to think things have changed.
You'd like to think they've changed, but what you normally have at FOS, and I don't think this has changed. In fact, I'm pretty sure it doesn't. Is that when you submit a complaint to the financial ombudsman, it doesn't actually go to the financial ombudsman. It goes to the financial ombudsman service, and you will get someone who's called an adjudicator who will look at that complaint in the first instance. And their job would be to sort of collect evidence from both parties. So they will collect evidence from the lender, and they will collect evidence from the consumer. They will then look at that, and they will make an adjudication based on those two pieces of evidence and what's going on. Now, once that adjudication's made, the result of that is sent out. When it's sent out, either side can come back and launch an appeal, if you like, against that adjudication. So, if I put a complaint to FOS, they found in favour of the bank, I can appeal that decision. That would then have got looked at by an ombudsman. And then the ombudsman would make the final ruling, and he would make the final decision on that case. What you had at the particular time when we looked at PPI was everything was done in a paper format, and an average sort of adjudicator would look at between sort of 7 and 8 cases a week. So if you've got 66,000 cases there, if you sort of look at 8 weeks, there is loads and loads and loads of work, as you can imagine. Now, obviously, at that particular time in the PPI, at the start of the PPI, everything was done with paper files. I mean, unbelievably, even then, it was all done in paper files. That may have changed. But one thing that we have to look at here is, what is the role of the financial ombudsman and the financial ombudsman service? Without doubt, there has to be a little bit of sympathy goes with it, because they were never set up to look at this. They were set up sort of in the early days before, if you like, complaints became fashionable. And they were set up to look at the sort of one-off query that any consumer might have had against maybe sort of a bad advice on a pension or on an investment, anything like that. And they were, they weren't necessarily sort of categories. They were just financial complaints, and they were looked at, and they would be minimal. But, they were never set up to look at PPI, back in the day of bank charges. They were never set up to look at that. And now if they get these car claims, that's not what the FOS was there for. And you have to think, should there actually be a 2-tiered system here? And you have the Financial Ombudsman Service, and they concentrate on the regulated and really complex type claims. And then you have almost like an admin area that deals with, don't want to sort of belittle it, but it deals with the smaller claims as such, because it's not workable. It wasn't workable in PPI. I mean, I went there, I think it was about April 2010, and they had sort of roundabout sort of 36,000 complaints outstanding. I remember having a chat with them when I went there, and their aim was to get that down to 25,000 by the following Easter. I stayed there till the end of August the following year, and that figure had gone up to, I think, about 106,000 complaints. You just, you have to have to give each complaint the individual sort of assessment that an ombudsman needs to provide. You have to have a massive team to stand still, let alone go into that, because each person is an individual, and each case has to be looked at individually. And they all follow the same sort of lead, and you can automate it to a certain process, but it's still one person against one lender, and that isn't sustainable for large volume complaints, and that's why they struggled so much with the volumes of PPI, because it wasn't set up to deal with it.
So what do you think the purpose of the £250 fee is then?
In my opinion, it's to actually sort of probably give people a lesser incentive to go there. And, you do see, and again, sort of anyone who's had any dealings with the financial ombudsman, you see complaints there that just should never, ever, ever go there. And when there's no accountability on a CMC firm or anybody to pass a complaint to FOS, it's, what have I got to lose? And, it's almost like throwing mud at a wall. If I throw enough, some of it will stick. Is that fair? No. I mean, when the banking side has to pay every time whether or not it's justified, why shouldn't there be something coming in on the consumer side as well? I mean, that does even it up. And I kind of understand that. But what I don't understand is £250 each case fair? And why don't you get the whole lot back if you win?
Yeah, why are they keeping that 75
Yeah, I mean,
quid?
what is that £75? And equally, are they using the revenue that they generate from that to then refund the banks on the cases that they win? Because they're paying out, on PPI, they must have paid out fortunes, banks, to actually take the sort of cases to PPI. And people know this. And, you get to a stage where, okay, the redress on a PPI policy may have been small. The amount of money they had to pay FOS may have been more than the redress. But if you just redressed everything, you're then being unfair to other consumers. And so, it's a very, very big balancing act to actually get it right. And have they got it right? I don't know. Did they have to do something? Yeah, possibly, to, make sure that only genuine complaints go there. But, and this is where the big but is, if it's deemed that the FOS are allowed to look at these, then are they going to get even more? Because no one's actually going to know what is a true redress and what isn't, because, everything is actually in the hands of the lender, and you haven't got anyone on the consumer side.
Well, one of the things I said to Kevin on the last podcast was that you're making the weaponization of FOS so real, because, as we know, the caliber of the barrister that they're sending to the courts, the county courts in literally every part of the country, the £5,000, £6,000, £7,000 barristers for the full day, that's what they'll charge, and a £650 fee or whatever it is to not uphold a complaint, allow them to escalate it to the FOS, and then the FOS find in the claimant's favour and then penalise the lender. Seems like a massive discount on what they're currently going to pay if we litigate it. Win or lose. When these car finance lenders win in court, as they have done, they're not financial wins.
No.
They're not recovering costs. The ones on the fast track, obviously they're recovering the costs, but the vast majority of these are small track claims, so it's a lose-lose scenario for the banks. And it just feels like the introduction of the fees for the FOS has just gone, well, this is just cheaper. If you're looking at it from a purely commercial perspective of a cash flow exercise for the banks, is it cheaper to reject them all, and then whatever the fallout of that would be, I would imagine it's quite high.
Yeah.
Because, each company to submit 1,000 complaints would need $250,000 per month, per week, whatever. No company's got that.
No.
So is it just cheaper to reject everything? All of these complaints that have gone in via Martin Lewis and everyone else, is it cheaper just to reject them all, push them all into FOS, buy themselves probably 2-3 years, get found against them, for the ones that do escalate, and then pay the £600 penalty?
Yeah, I see your point there, but, and this is a very big but, you will have massive sort of financial penalties, really, and you will go into the public arena, really, as, or the FOS release figures on, all the lenders and how many complaints they've had in from that lender and how many have been upheld and how many have been overturned. And the detrimental damage for those figures to be really high is quite bad. And I don't think that most lenders would want to be hauled in for that. And obviously the FOS and the FCA, I'm not saying that they are sort of linked, but, they are both sort of government-run organisations. And, the FCA will take a very, very keen interest on sort of, any one particular lender that has a very, very poor record at FOS. And they will pick up on that. So I understand the point. I mean, you could then argue, is it just cheaper to pay everybody out? End of. Which is really what the FCA are sort of trying to go down. But I don't think that they have taken it and then considered everything that they need to make sure that the consumer doesn't lose out. Because how I see it at the minute, the consumer will lose.
Well, yeah, exactly. I was going to say, they want everyone to pay out, but who's sense checking the deals that are paying out? But so just on the FCA then, obviously we've seen about £2 billion be put aside by various different car finance lenders this year, or, well, they've just announced their accounts and it's come out. Will the FCA, in an announcement, as they're saying, sort of 6 weeks post the Supreme Court decision, the Supreme Court judgment being handed down, would they then force lenders to increase their provisions? Because I know from a FCA rulebook perspective, you might know more than me, that they have to have adequate capital in reserves for any potential payments, especially when it's like classed as client money now. Would they force them to make severe provisions, or would it just be based off the banks licking the finger and going, what can we get away with?
Well, I think, possibly a bit of both, if I'm honest. But if you look at it, that, what did they say? There was 33 million, potentially 33 million.
31.7 million.
7 million of these claims. We know sort of what an average redress is on these claims. You've got the statutory interest on top of that and everything there. This is a massive bill. And to force it all in one go is going to be really, really difficult for companies. And I think, they are somewhere along the line. The FCA have got to announce, well, you're going to do this, but we would expect this to be done in stages over the next however long, because you can't just concertina it too much because companies just won't be able to pay it. And yes, you're right, they do have to have the reserves to pay this. I mean, some companies could almost be insolvent on paper with this type of debt. And then, that goes back to what I said earlier. What effect does that have on their share prices? What effect does that have on the shareholders in that company, which generally speaking is pensions and other things like that? And all in all, there's a lot of people potentially going to lose out of this.
So with the FOS, and obviously the FCA coming out for an industry-wide redress, do you think that the FOS would essentially just become redundant then if a redress scheme happens?
Initially, yeah. Until
it goes wrong.
And until some people start to challenge the amount of redress that they've got, and until that sort of, I mean, what will happen without doubt, and I think anyone who doesn't think this is probably a little bit blinkered, is that even if there is this scheme, you will get companies who may not even exist at the minute, but will set up that will check whether or not the commission that you've been repaid is correct. And I mean, I'm not being funny, Sentinel have that data now. We would be able to look at, we know what an average commission amount is. We know the average loan amounts, we know the average start date of the policy. We know all that. So we can quite easily say, well, on average, the commission is X, the policy with us started in Y, and your redress should be in and around this ballpark figure. And it's 10, 12, 15% of that figure. I think you need to look into that. And that will start up as a cottage industry, and then they'll get bigger and bigger and bigger and bigger. And surely, as I said earlier on, we don't want that, because, the FCA want to put this to bed. They want to simplify it. They want to get it done sooner. They don't want it dragging on. And I can't see how they can avoid that by having this type of scheme in place, because people will question it. A lot of people will sign and be very happy that they've received 500 quid, blissfully unaware that the amount they should have been would have been 5 times that figure. And I think that's where, you're gonna possibly see that sort of thing happen should this go ahead.
What's your opinion on why the FCA hasn't approached someone like Sentinel? I've got my own opinion, but in everything that you've done, and everything you've seen, and obviously you've seen how the lenders behave towards us, and the level of redaction that they give us, even off the back of like court-ordered disclosure. We physically got judgments under PAD applications, and they provide us with the information that's so heavily redacted and in breach of all of the orders, and we have to make these applications to the courts to show non-compliance with the orders and so on. Why would the FCA not approach us for that level of information?
I think that what they're trying to do is in a way, they are trying to protect the people who they think need protecting the most.
Who, the
That
banks?
should be, that should be the consumer. But I think in this particular instance, they're thinking we need to protect the banks. And the only way they can protect the banks is to build a shield up. And I believe that's what they're doing. And I think that they are building a shield, but someone, someday, somehow will penetrate that shield.
Yeah, it'd be us.
Yeah, it will. And it will come out. And I don't understand the logic behind that. Surely the best way to do it is to actually say, right, here's the redress that's due. You need to pay back the complete amount of commission that was charged, hidden, all different types of commission, plus a statutory interest, and that's the redress. Simplified, easy. You don't need any complicated software to run that redress. Everybody knows where they stand. You know, we know full well that what the commission should look like and how much that commission is, and we would be able to look at someone and say, yeah, that looks right, that looks fair, and not need to challenge it. By doing what they're doing at the minute, it's almost like they throwing a sort of almost a protection over the lender, saying, well, you sort it out and most people will accept it. But they won't, because they never do. You know, they will to start off with, but then it will come out, like the Plevin one came out, and like everything else comes out. And, you know, as we said earlier on, this isn't people wanting to make profit. This is people looking to get back what they are owed and get back what, you know, they've been taken off them unfairly and hidden from them. And that's all anybody wants, just to put them back in the position they had been in had they not have done this in the first place.
No, you make a very good point. So I suppose, obviously, you're going to be there on April 1st, 2nd and 3rd with us watching, obviously, what happens in the Supreme Court.
Yeah.
What's your opinion then in terms of, obviously, this is an expedited case, and we know from previous experience that the Supreme Court can hand down a judgment, but if everyone's sat around waiting for an FCA redress scheme, that could be, you know, it could be weeks, it could be months, it could be years. So what do you think personally is going to happen post handing down of a judgment on the assumption that it goes in the favour of the consumer as it did in the Court of Appeal?
Well, there's two things really that can happen. One is that everybody sits on their hands, if you want for a better word, and wait to see what the FCA come out with and see how quickly that comes out with. Or you're going to get companies are going to say, right, you've had long enough. You haven't done this. You know, enough's enough. We're going to start. We've now got a judgment in the highest court in the land. We're now going to start to push these cases down a litigation route. You know, you've had the chance to sort your own house out. You haven't done it. So now we're going to go down that route. And I don't think it would sort of take too long necessarily to go down that route before you almost forcing them into a corner to actually do something about it. Because you can't have, you know, you can't have a regulator sit there having the highest court in the land saying it's wrong. They're in charge of it, you know, and they're saying, well, just give us a bit more time, lads. Like, you know, we'll sort it out in due time. There's no hurry. You know, this has been going on now 3-4 years.
Yeah.
And everybody who knew that we were going to get to this point at some point. And, you know, thanks to the people who we've mentioned earlier on, that's where we are today. And that's how we've got to where we are today. That's not through the intervention of the FCA. Been left to them, nobody would be getting anything, I don't think. You know, that why did they not act when they banned it if they thought it was that wrong? It's only because it's been brought into the public domain that we are where we are now. And so, you know, we're in a situation where they have to act. They're forced to act, really, because otherwise their sort of credibility goes, I think. You know, they've got to be seen. You know, their number one thing is that they protect the consumer. And if you look on their website and why they're there and read up anything on there, they are there to protect the consumer. That's what they've got to do.
Well, I think as well, you know, if we hadn't have done what we've done and other companies hadn't done what they've done, we wouldn't be sat here now with the conviction that we've got about how wrong the FCA statement is, how flawed the industry is, how much the car finance lenders are playing this down. You know just as well as I do, the amount of disclosure that we've got across thousands and thousands of litigated files, across pre-action disclosure applications. We've seen the volume bonuses, we've seen the advanced commissions, we've seen the DCA commissions, we've seen the fixed commissions. We know, as you quite rightly said, how the DIC element is the tip of the iceberg. Yeah. And we know how much consumers have been done wrong. And I think it's if we hadn't have done all of that, and we haven't shared that information and obviously received other information from other people, we wouldn't be sat here now going, well, if the FCA don't get it right, we're going to flood the courts, because that's the only way to get proper justice for the clients.
Yeah. I mean, you're 100% right. Well, what we have to do, and by that I mean sort of our side of the industry, what we have to do is to make sure that when this is all finished and it's all been put to bed, that consumers have got back what they're owed. We don't want consumers to be made rich out of this, but they must get back what they're owed, and that's our job. It should be the FCA job, and they now saying, well, it should be the job of the lender. No,
passing the buck.
Yeah, I don't agree with that. It's the FCA's job to sort this out. They are the one who've regulated all parties, CMCs and the lenders. I know they don't regulate law firms, but they partly do that. And so, they have got to make sure that when this is done, their number one objective, to look after the consumer, is met.
Yeah,
simple
as that. And on the same thing, that's exactly what this side of the aisle wants.
Yeah.
No one is expecting. No one wants the banks to pay more than what they owe. No one sat there going, oh yeah, well, let's come out with these stupid quantum valuations. Yeah. It's very clear what they owe. The argument is based off what was the commission paid and return it with some form of element of statutory interest yet to be determined. Yeah, and that's kind of what just absolutely blows my mind about the likes of Rachel Reeves and the intervention request by the Treasury and all of the stupid comments that she said about destabilizing the industry. And PPI was 53 billion. The car finance market is valued at, the highest one I think is 38 billion, 40 billion. And all of the bank analysts are saying, well, it's not going to go much higher than that. Well, 53 billion didn't ruin the economy.
No. In fact, it had the opposite effect in a way, because that money, I mean, the PPI, people could say, actually helped bring us out of a recession. That money that people weren't expecting came to them. They didn't put that money in an ISA. They didn't put that money in a savings bond. They went out and bought a television or treated themselves or went on
cigarettes
holiday.
And alcohol, high tax goods.
Yeah, and so, but that in a way helped bring us out of recession. The amount of additional money that was floating around
over a steady period of time.
Yeah, and the same, okay, we're not in a recession at the minute, but we're closer to being in one than not being in one. And you could have the same knock-on effect here, that money, people who borrow money spend money. Mm-hmm. And, these are people who have borrowed to buy a car. They like buying cars. People have to buy cars. It is almost an essential today. And so they would have bought those cars regardless, but they should have bought them at a fair price and been treated fairly when they bought them. And they will continue to buy cars. This won't stop people buying cars. This won't put people off buying cars. And if the money comes into the market, they may, buy more cars in the future. And I just don't understand where they're coming from by saying that this could destabilise.
Well, I was going to say, is when someone makes a statement like that, is it thought out? Is it genuinely intended to mislead? Is it, expected to be read off the front page of the newspaper and people just start an echo chamber and they start repeating it, but no one genuinely checks the validity of the claim? Is everything that we're currently seeing just going full conspiracy mode now? Is everything that we're seeing just a massive... They banned DCA, they banned discretionary commissions back in 2021. Was that a bone that they chucked for the industry to not focus on anything else? when we know that the fixed commissions exist, we know that the advanced commissions exist, we know the volume bonus, then they make all of these intervention requests and they say it's going to destabilize the economy. We need to protect the banks and we need to make the UK a investable place. Is everything just a one big smokescreen to try to seed doubt in the courts, or seed doubts in the law firms, or definitely seed doubts in the CMCs, in the marketing firms? Everything just as a pure whole damage limitation play for the banks.
Yeah, potentially. But I mean, equally, I just wonder if it's not a new government trying to
make headlines.
Well, one, trying to make headlines, but more importantly, trying to protect a sector that they believe is vulnerable, and that is the UK banking sector. And is it their way of doing that? But, they can intervene whatever they like. And, they could try and do what they like. And I know that they've not been granted the sort of appeal in the Supreme Court case. But, I mean, ultimately, that's sort of not the point. The point is, if the law's been broken, it's been broken. Mm-hmm. Whether or not the government doesn't agree with it, whether or not me and you don't agree with it, whether or not the lender doesn't agree with it, if someone's done something contrary to UK law, no one should stop that. No one should have the right to stop that.
Especially a Labour government.
Whatever. And no one should have the right to water that down. And, the courts are there to protect everybody. And that is to protect the banks and to protect the people. But they're also there to correct, the wrongs that have historically happened. And I'm quite sure that the Court of Appeal wouldn't have been swayed by, the Treasury saying, this could be a little bit dangerous, boys. Because, that doesn't change law, does it?
No. So do you think the FCA have got a mammoth job on their hands then? Do you think the FCA are purposely not looking back at what happened in PPI and Plevin, and they're just massively under-equipped? They're refusing to look at history. Do you think that the FCA have got this in the locker to deliver this redress scheme?
I think they're under-resourced. I think they're massively under-resourced, and it's a massive piece of work to take on. And the time frames aren't in their favour. I mean, you can say that maybe they've been sort of sitting down and not been proactive enough over the last 2 or 3 years to sort this out. But I don't know that, necessarily they have the resource at the minute to sort of cope with something this big. I'm not sure. I don't think so.
Because we spoke to them very early on in January last year, presented them a lot of information, and then we never heard anything back. No. And I think, to quote one of the women that was on the court, they said she couldn't believe what she was seeing.
No.
And besides the odd update, obviously yesterday's one included, what have they done?
Well, this is the big question. And going back to that meeting we had with them, how come a law firm could actually surprise a regulator who is supposed to be looking after the industry with the information and data that we gave them? They should know that as a regulator.
They've already banned one of the commission types.
Yeah, so as a regulator, what did they actually do in making the decision to ban that commission in the first place? Why did they ban it? What actually took place there? What was that process? Why did they not gather this information at that particular point? And why did Sentinel Legal be able to surprise them with, this is what we're getting from firms and this is what we're seeing? They're regulating this. They should have been all over it, surely, from the start. And, they shouldn't be relying on us to point out that this is going on within the industry. And then, what's more scary, as you've touched on earlier on, is that not only did we point it out to them, but they then almost buried their heads in the sand since we pointed it out to them, because they almost seem afraid, well, what else will these boys be able to show us? And it's starting to get that feeling that, are they, almost like running a little bit scared of of what could potentially be revealed.
Well, this is exactly my thought, is that are we making it a lot more complicated for them? Because it's quite clear they want to touch it once, dust the hands off of it. This is a redress scheme. We've done all of our job. They can say that they've done their job. Obviously, they're getting slated in the news for multiple reasons, the FCA. So if we brought complications to them in which we'll refer to as the truth, the true state of the scandal, which is car finance mis-selling, have we brought that information to the FCA and they've gone, this is going to complicate everything? You know, genuinely compensating the client for what they are truly owed is going to complicate everything, and we can't do it. It's not in our wheelhouse. We're under-resourced. Whatever. The banks will hate us. Whatever the reason is. Do they just not want it? Is it head in the sand tackle? We don't want to hear it. That's why we're not going to reach out to you. And we'll start a redress scheme. It'll happen for 3-4 years. Then Plevin version 2 will come out for car finance claims, and we'll just kick the can down the wrong road for the next decade, 2 decades.
Yeah, and I mean, the one thing that struck me about that meeting we had with them was the genuine surprise.
Yeah, it was a genuine shock.
It was a genuine surprise. And, you know, as I said earlier, you know, they shouldn't have been surprised. They're looking after this. They should have known. And I also don't think that they were aware of just how big a problem this is, and what had gone on under their watch, because, you know, it was their watch. You know, can they be held responsible for it? You know, you can argue that yes, you know, perhaps they have got a responsibility there, and maybe they have failed in what they've done. I mean, I wouldn't want to say that's definitely yes or no, but there's a potential there. But, you know, ultimately, it doesn't matter if you fail at anything. It's how you react when you've done that. And if you've done wrong, put it right. That's all anyone asks for. And that's what they need to do now. You know, nobody can change the course of history. Nobody can go back on any of them car deals and do them properly, because those deals have all done. But what they can do is, one, go back and say, yeah, okay, we did that wrong. You know, we were wrong what we did there. Here's what we wronged you by. And moving forward, we're doing this. Like they managed to do in 5 days by coming out with a paper which was a sort of commission disclosure on how much commission they were going to get, et cetera, et cetera, et cetera. 5 days.
Yeah, 5 days. I think they stopped lending for about 2 days, and I think the Close Brothers took 3 days to rewrite their documents, and then the whole industry had done it within 5 days.
Yeah, and this was, 2021. So 4 years.
Yeah.
So 4 years, they did in 5 days what the FCA hadn't got them to do in 4 years.
Mm-hmm. Yeah. Besides, and the fact that there had been, God knows how many we'd won in the in the county courts.
Yeah.
You know, there's plenty of direction as to where this was going. But
yeah, very much so.
All right, mate. Well, that's really informative. I think that's a good place to leave it off. Obviously, anyone listening can connect with Mike on LinkedIn, Mike Arnall, Director of Operations at Sentinel. But anything else you wanted to add?
No, I think we've
covered a
about
lot.
everything.
Yeah, we have. But right, brilliant.
Right, thanks
Cheers,
for your
mate.
time.
Thanks,
Cheers.
mate.
Bye.